What if you made one single investment that completely transformed your life? We all know that investing is a key strategy for growing wealth over time. While diversifying your investments is a common piece of advice to mitigate risk, it's fascinating to consider how a single successful investment can dramatically transform your situation. Just buying one stock, for example, could make you a millionaire, allowing you to retire early and completely open up life's options. Let's explore how just one good investment can completely change your life if things don't turn south. Stay until the end to learn how almost anyone can transform a small amount of money into a life-changing sum with an investment that's so simple and safe, you'll be amazed. My name is Chris, and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. When a successful investment pays off, it can kickstart a chain reaction of positive effects on your life. Suddenly, you're seeing more money in your account, which not only boosts your immediate financial situation, but also improves your cash flow or the amount of income you receive. This influx of funds opens up new doors for you to explore other investment opportunities or even take a step towards achieving other financial goals you might have set aside. One of the most well-known examples of a successful investment is Apple, a stock we've all heard of. Imagine investing $10,000 in Apple stock back in 2003 when the price was about $1 per share adjusted for stock splits. By the end of 2023, Apple's stock price had surged to nearly $200 per share. This means your initial $10,000 investment would now be worth a life-changing $8.9 million before inflation, returning you roughly 38% annually. With this kind of success, you've got some great options ahead of you, like paying off debt. Knocking out high-interest debts like credit cards or student loans would take a load off your shoulders. It means less stress about monthly payments and a chance to put that money towards things that really matter to you. Investing in real estate. Imagine putting your money towards buying a home or rental property. Real estate can grow in value over time, and renting out properties can bring in steady income. It's a smart way to build wealth by generating substantial returns in a stable asset class. Diversifying your investments. Now that you've got more cash, you can spread it across different types of investments. You might look into stocks, bonds, index funds, or even try something new, like real estate investment trusts or even backing a startup. It doesn't have to be the next tech startup. It could be as simple as funding a food truck. Diversifying helps protect your money from ups and downs in the market and can boost your overall returns. Starting a business. Maybe you've always dreamed of starting your own business. Whether it's a small venture or something bigger, using your funds to kickstart a business can be incredibly rewarding. It's a chance to create something meaningful and potentially profitable if you're willing to put in the effort. Planning for the future. Use your success to set yourself up for the future. Think about saving for retirement, putting money aside for your kids' education, or supporting causes you care about. Planning ahead ensures your financial success continues to grow and benefit you in the long run, as well as receiving meaning from your money by using it to improve others' lives. These choices give you the chance to make the most of your financial success and set yourself up for even more opportunities down the road. It's about making smart choices that align with your goals and values, ensuring your money works hard for you now and in the future. Investing in Apple stock has been a huge win for many people, giving them respectable returns over time. But it's good to remember that Apple is just one example of many successful investments out there. The stock market is full of opportunities beyond tech giants like Apple. Companies in sectors like biotech, energy, and even old economy stocks have also made investors a ton of money. Each of these offers its own potential for growth and profits, showing how diverse and exciting investing can be. They might not get the same hype as Apple, but they show that big returns can come from unexpected places. Successful investing isn't just about following the crowd. It's about spotting promising opportunities that others might overlook and seizing them at the right time. Investing can feel like a wild ride, with some rare bets hitting the jackpot while most fall short. While Apple and Amazon showcase big success stories, many investments simply don't pan out. Sometimes companies stumble due to unexpected challenges or shifts in the market. Other times, it's impatience that leads investors astray, pulling out too soon or diving in without thorough research. It's easy to get caught up in quick gains and splurge on luxuries like a new car instead of holding on for the long ride. Successful investing requires foresight and patience, not just luck. Balancing risk, doing your homework, and staying committed for the long term are key. Apple's rise as a successful stock didn't happen overnight. It's all about being patient in the investing game. Apple has faced its fair share of challenges over the years, adapting to changes in the market and launching products that shook things up worldwide. For investors, this journey shows how important it is to stick things out for the long haul. It wasn't a smooth ride either. Many investors had doubts along the way, wondering if Apple could keep up its momentum amid all the obstacles. Looking back, it might seem like hitting the jackpot, but at the time, it wasn't always clear. The same is said for those who invested in real estate back in the early 2010s. Nowadays, people look back and ask themselves why they didn't buy real estate when it was so cheap. At the time, that wasn't the thought process most people had. More like, will the real estate market and economy in general ever recover after such a period of economic distress? At the time, many people would have thought that you were completely crazy for buying real estate. Those who have benefited from Apple's growth stayed steady through market ups and downs, believing in the company's future. Patience in investing sometimes pays off, letting you ride out the bumps, find opportunities, and ultimately enjoy the rewards of a solid investment. When you're investing, locking in profits can be a smart move to secure gains and diversify your portfolio. Imagine you've hit a sweet spot with a stock like Apple. It's been climbing steadily, but you start to feel like it might plateau or even dip. Taking some of those profits off the table lets you realize your gains, ensuring you've got cash in hand. Plus, it gives you the flexibility to spread your money into other promising investments. Maybe you've got your eye on a growing tech startup or want to beef up your real estate holdings. Diversifying helps balance out risk and open up new opportunities for your money to grow. You want to stay nimble and make strategic moves to keep your investment game strong. That way, if the stock drops all the way back down to where you bought it, or even lower, you don't lose everything. When you invest in something speculative, it's important not to put more at risk than you're comfortable losing. It's smart to spread your money out into broad market index funds and ETFs, and reserve a little bit for more risky investments, sometimes referred to as fun money. Experts recommend limiting your fund money to 10% or less of your portfolio, so if you find a great investment, you can still receive life-changing benefits. But on the other hand, you're not going to go broke betting on the next winner. Finding that balance means weighing the potential rewards against the chance of losing money without stressing yourself out. Whether you're into stocks, crypto, or other investments, knowing how much risk you're okay with is key. It's about setting clear limits on how much you're willing to invest, understanding that markets can be unpredictable. Following this rule helps you avoid making wild choices when things get volatile and keeps your financial outlook steady even when things feel uncertain. If you want to earn a higher than average return on your money, consider purchasing a home. For example, imagine buying a $500,000 home with a 5% down payment of $25,000. You decide to finance it with a 15-year mortgage, so you'll own it outright in 15 years. Keep in mind, this example only makes sense if your housing costs are similar to what you'd pay in rent. Having a roommate can help bring down the cost to a comparable level. Now let's say the home appreciates by 3% each year. After 15 years, it would be worth about $778,000. Your initial $25,000 down payment has now grown to nearly $800,000, which translates to an impressive annual return of roughly 26%. That's not bad at all considering the amount of risk involved. While diversified investing is a smart idea, a single successful investment can have a life-changing effect. It can turn small sums into extraordinary wealth, helping you retire early, support charitable causes, or even kickstart a new business. The key to making the most of these opportunities is doing your homework, making informed choices, and having a backup plan when and if things don't work out. With the right approach, one great investment can completely transform your life.